Hello, and welcome to another edition of CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, November 19, 2008. In New Zealand, producer output prices decelerated in the third quarter, showing a quarterly growth rate of 3.7%, while producer input prices were at 2.8%. Forecasts had called for an even bigger slowdown in both of these gauges. Fuel prices were the main culprit in driving up producer prices for the period, which should be expected to reverse in the fourth quarter. In Australia, the leading index saw a very bleak negative 1% change on the month as the Australian economy is facing difficult challenges in the face of an increasingly severe global slowdown that will affect demand for commodities. The domestic economy is also under pressure as stock prices plummeted and the housing market started to soften. The poor economy has also translated into weaker job growth, which will cut into consumer spending. In a speech today, however, RBA Governor Stevens said that the biggest mistake we could make would be to talk ourselves into unnecessary economic weakness. There is a chance that Australia will be able to avoid a recession as it has more room to cut rates in order to support the economy than other developed nations. The Aussie-US dollar pair stuck to its range seen the last two sessions, reaching a high near 0.6590 at the New York Open before retreating in later New York trading. Meeting minutes today showed that Bank of England considered an even bigger reduction in the benchmark interest rate than the 1.5% cut they announced on November 6th. In the end, though, the Monetary Policy Committee voted 9-0 to lower rates to 3% from 4.5%, as they did not want to spook markets or hurt their credibility on inflation in the markets. A second release from the UK showed that the outlook for manufacturing output in the next 3 months is at its weakest level in nearly 30 years. The latest CBI Industrial Trends Survey revealed also that order bookings remain near their lowest level since 2003. There were 38% more respondents saying that their total orders were below normal compared to those saying they were above normal. The pound-dollar pair broke above this week's resistance and climbed to 1.5250 at the New York Open after a smaller rally in the European session. Usually, talk of further rate cuts would hurt a currency, but the pound was heavily oversold last week and may be making up for it, as a more aggressive Bank of England may be a positive sign to trying to revive the ailing British economy. The climb to a one-week high gave some traders the opportunity to sell the pound at a higher price, bringing the pound down during the rest of New York morning trading. U.S. consumer prices fell by the most in 61 years, dropping 1% in October, a bigger fall than predicted by economists. The main catalyst for the decline was an 8.6% reduction in the price of energy, though food prices ticked up 0.3%. Core prices, which exclude both energy and food, fell 0.1% on the month. Combined with Tuesday's report showing producer prices falling by 2.8%, it is evident that inflation is on the retreat during this economic slowdown and that the Fed will not feel restrained in cutting rates further if necessary. U.S. housing starts fell for the fourth straight month, decreasing 4.5% to a seasonally adjusted 791,000 annual rate, which is a new record low. Building permits, an indicator of future constructions, fell 12% to a 708,000 annual pace. With home sales and prices falling, there's less incentive for home builders to start new constructions. One benefit to that is that this may thin out inventories as excess supply is making it harder for home prices to stabilize. The euro-dollar pair had an interesting response following today's U.S. data as the euro rose 160 pips to test 1.2814, breaking out of a consolidation pattern seen the last three sessions. However, those gains were cut down quickly as the pair ran into resistance from Friday. U.S. stocks fell yet again as today's inflation and housing reports mixed with worries over the fate of the U.S. auto industry. In general, global stocks were all down today as well, given the Forex markets their latest jolt of risk aversion. In Canada, the leading index fell 0.4% in October after a 0.3% drop in September. However, most of the decline was a result of falling stock prices, which were down 17% in the period. Other components held up rather well, especially consumer spending, which is a sharp contrast from the U.S. The U.S. dollar-Canadian dollar pair saw very choppy action in New York trading, though it stuck to a relatively small 150 pip range for the day. Overall, with global stocks weaker and commodity prices down, the Loonie was pressured and tested recent resistance at the 1.2450 level. Looking at some upcoming releases, Japan posts its trade balance data tonight. Overnight, Germany releases producer prices, Switzerland posts its trade balance, and the UK reveals data on retail sales and government borrowing. Tomorrow, the US will post its weekly jobless claims, Philly Fed index, and leading indicator. Canada will reveal 2 releases as well, wholesale sales and data on company profits. And that wraps up our broadcast for today. Thank you for joining us here at CMSFX.com, and happy trading.